In this session, let's understand about post-shipment credit. First, let's look into the background. When a transaction takes place, let's say when a trade transaction takes place and parties are in two different countries, then obviously it will consume more time and there could also be uncertainty whether that buyer will release a payment or not. And there were also instances where the seller have to wait for a longer and longer period to get the money from the buyer, and it will have significant impact on the working capital cycle of the exporter. This will disrupt the money cycle of that exporter. So what is the solution? That's where post-shipment credit comes into picture. So what is this post-shipment credit? This is basically a credit facility which are given to the exporters after they ship the goods. Okay, so this will help the exporter to meet their working capital requirements. So look at here, this is the credit facility extended to exporters after they ship the goods until they realize the money from the buyers, basically the importers. Let us look into the definition of this post-shipment credit from RBI point of view. RBI says post-shipment credit is nothing but any loan or advance granted or any other credit which are provided by a bank to an exporter of goods or services from India from the date of extending the credit after shipment of goods or rendering of services to the date of realization of export proceeds, and it includes any loan or advance granted to an exporter in consideration of or on the security of any duty drawback allowed by the government from time to time. Okay, let's split this now. So this definition says that this post-shipment export credit facility is nothing but a loan. It can be a loan or it can be an advance or it can be any other credit, let whatever name you call it. But if it is provided by bank, and that also includes NBFC, to whom? To an exporter. So that exporter may be exporting the goods or services. But the substance is, it is provided to the exporter. And for what period? See, this is basically provided to the exporter to cover the credit which he is giving to the ultimate buyer, right? So look at here. It is from the date of extending credit after shipment. So they have shipped the goods. So from the date of shipment, the exporter is giving some credit to the buyer. Let's say 60 days, 90 days, whatever. So this is from the date, that is this post-shipment credit facility is from the date of extending the credit after shipment of goods or services till they realize that from the importer. That is the date of realization of export proceeds. And they also say this also includes loans or advances granted to an exporter, let's say on the security of duty drawback, right? So here we have the definition, and now we have a fair idea about what is post-shipment credit facility. So what are the benefits of this credit facility to the exporter? See, for him it is going to reduce the working capital issues. The money which is otherwise logged with the importer is now substituted with this credit facility. So when the exporter is shipping the goods, then he is going to submit the documents to the bank and he is going to get the money. And that money will be liquidated when the importer makes the payment. So this is going to reduce his working capital issues, and it is also going to give flexibility to the exporter to give credit period to the importer. So just understand this. If there is a bank in our country and if that bank is going to give post-shipment credit facility, then on the strength of this credit facility, exporter will also be ready to extend credit to the importers. So that will open up a new array of customers. And let's see who are the major players. Major players are Exim Bank of India, then leading commercial banks and even NBFCs. They provide this post-shipment credit facility at concessional rates to the eligible borrowers. And when I say eligible borrowers, eligibility is arrived as per DGFT norms, and that includes all exporters, merchant exporters, manufacturer exporters, export houses, trading houses, manufacturers supplying goods to merchant exporters, export houses, trading houses. They are all eligible. And this facility Generally what we see is extended up to 10 crore, and in case of domestic exporters it can go up to 50 crore as well, and it will also increase depending upon the size of the business. Okay, so that's about major players and the quantum and how this facility is extended. See, in general 80% of CIF invoice amount will be given as credit facility, and that's the amount that can be availed as credit, and of course for that prescribed documents should be submitted, and the remaining 20% balance can be availed when the importer makes the payment. And here the credit period can be maximum 180 days and it can be extended for another 90 days with RBI approval, and this facility is generally operated as running account facilities, and here the drawings can be in rupee or it can also be in foreign currency. Next, let's see little more deeper who can avail this post-shipment credit facility. Already I said it is as per DGFT norms. So exporter have to meet certain eligibility criteria. Number one, exporter should be an Indian exporter. They should have proved track record, and the credit amount whatever they are asking for should be within maximum permissible bank finance, and margin amount will be like at least 10%, and adequate security margin will be insisted, like having a charge on the current assets, including the export receivables and ECGC cover. Then what are the documents? Lending institution will be insisting on certain documents basically to ascertain whether those export consignments have left the domestic shores or not. The common documents are bill of lading, airway bill, commercial invoice, certificate of origin, insurance certificate, letter of credit, inspection certificate, IEC certificate, packing list, and other documents as the case may be. There are also certain do's and don'ts which exporter have to take care. One, when they are exporting to a buyer in different country, they have to obtain credit report on buyers from ECGC before dealing with them. And exporter should also take care not to change the payment terms after shipment. And exporter should also request their banker, exporter banker, to explicitly instruct the importer bank to get bill of exchange noted and lodge a protest in case of non-acceptance or payment. So in this session we got a brief picture of post-shipment credit. Do you know about our one-to-one discount program? It's for you to support your learning desire. Let's say you have gone through the courses and you want to enroll in a course, but you have some financial constraint. Whom to ask for? Ask us and we'll help you. So you just have to fill a form where you have to give your name, number, and the course you are interested in enrolling, and we'll create an exclusive discount for you. That's why we call it as one-to-one discount, and that will be much lesser than the price what you see in the website. So this will enable you to enroll in the course at much lesser price and kickstart your learning journey.